Good afternoon, ladies and gents. Welcome to another video brought to you by Total Control Traders. How's everyone doing out there? Are you guys staying safe? Protecting your capital? Getting ready for that opportunity coming up? Because there's going to be an opportunity coming up. I hope you're all ready. All right, let's discuss where the chart's at, what we're looking at. First one is, same as usual, SPX. This is what we're looking at here. Actually, first thing, I want to discuss on the monthly chart of SPX. We'll do it a little bit different. Instead of doing the daily, we're going to do the monthly first. Now, when we look at the monthly chart, let's clean this up. This is the third straight month of red. Third straight month of bearish action. And that does not happen too often. When we look back in history, the last time during this run after the pandemic was in September 2020. There were 2 months. And pandemic, of course, there's 3 months of redness. And before that, you don't see a whole lot of that. You know, there's one back in 2015. And then before that, then be 2011. So it does not happen too often. Of course, there's the 2008 crash, which happened for quite some time. So with this, you know, I'm thinking there is going to be an opportunity coming up. Just a matter of when. And let's discuss what some of the targets that we're looking at. So on the daily, we talked about this upper trend line, upper trend zone potentially, because there is wick. If we're looking at the lower trend line, there's a wick over here, and now we wick again on this last rejection. And then the upper part of it, there's one rejection here and then 2 rejections here. So that's why we're gonna start using zones a little bit more. I mean, you could be a little bit more precise and just do a trend line. So you would use the upper trend line ultimately, and the lower one is fairly simple. The reason why I do the lower one as a zone as well is there is double supports over here, and then there is another support. It shows a little bit more reason why we bounce where we bounced from last time. This market, of course, is one of the hardest market that we have traded in. Well, maybe not, depending if you're bearish play, and we did enter bearish play on the Thursday. Yeah, that's been paying out pretty decently. So when we look at that, I took profits today, by the way, on the bear play. So when we look at that, you know, there is a descending wedge. This wedge can drag out for a long time, which I don't think it will. But based on the chart, you know, that's what it's saying. There is a descending wedge on the daily. Okay, now it is A, B, C. This is potentially still one single move. There is no clear bottom, clear reversal like this one back here yet. If you zoom in, you could call this 4 hour bottom for sure. So we look at 4 hours. This is maybe even the 8 hours actually. 8 hours, yeah, there's a bottom, and then rejection again. So now we're looking at a potential for 1, 2, 3, 4, 5. But when I look at this, you know, this is why I don't really use Elliott's wave all that often, because it makes more sense for this to be the 1, because 3 is going to be the biggest move. And then 5, you know, could be here. This could be still going, as we know the Elliott's wave 5 can get pretty extended. So we're looking at, what I'm looking at is coming down here. And that based on the confluence, 1-to-1 extension target March 21st would make sense. 2 weeks from now. So let's delete this. So there's a lot of confluence in that 4K area. Not to mention psychological support 4K. 0.5 of the whole run since since October 2020. This whole run, the 0.5 is right there. There is a key zone there where we saw multiple rejections and one support as well. And then it's never back tested since then. The 1-to-1 extension target from that first move, the 1-to-1 extension target from this most recent bounce, it's all around there. 4K. The most recent bounce shows 39.32. But depending on how you look at the chart, I still think 4K is probably going to be the target. Now, when we look at the chart now, it's only 186 points away on SPX to 4K. Hey, what a rejection. Opportunities are coming up, so be ready. You know, I hope your cash is ready, or if you're in bear place. What I see is, let's drag this 0.5 over a little bit. So do that. and then 1-to-1 extension target. So what I see from here is probably going to be something along this line. Oh, this line. And then bounce, make a higher low. Ideally, we want a higher low that's fairly strong, so 0.382 kind of thing before an actual break. Back test. I don't like the back test. Somewhere, something like that. We'll call it that. So this is the anticipation I have of the market, SPX wise. Nas is leading bears. Now there is one thing, we're gonna do a market deep dive since it's been some time since we actually released a market deep dive video. So before we get into the leading indicators, there is one other thing I wanted to discuss, which is QQQ over DIA, which is Nas over Dow Jones. Now we're seeing a slight loss of this money line now, which is very significant because there's been multiple bounces. 1, 2, or 2, 3, 4, 5, 6. I don't know. There's multiple bounces here, and the multiple supports here again. And as of today, we're seeing a second loss of it, maybe a third loss of it. It's not too accurate when you use one ticker over another ticker, FYI. Now, one thing that's very interesting on this chart, a while ago when we discussed this chart, we talked about how it could be a repeat of QQQ over IWM. So if it is, it is top out 1.91. What's the other chart that we're looking at? The first one that we noticed was, I think it was this one, QQQ over IWM. Yeah. 1.91, 1.92 top out, and then came all the way back down to test that trend line again before popping. So that could be a scenario we're looking at for QQQ over Dow Jones. Means going forward, Dow is going to be a little bit stronger versus Nas, which makes sense based on where the market is, based on where the cycle is, based on the leading indicators that we're going to discuss. So 1.15, 1.15, this is now a double top. Whether we're going to be breaking straight down, that is going to be something, and this is why I have this channel from before extended. If we break straight down, we're going to be watching for a back test somewhere around whether this upper trend line of the channel or the lower trend line of the channel. So this is something I'm watching. Nas could potentially be going into weakness versus Dow, or you could say Dow is going into strength. All right, so let's discuss the leading indicators. First one is going to be US dollars bull break. So if you've been sitting in cash in this bear market, you're actually coming out ahead. US dollars ramping up. Oil ramping up. Gold ramping up. So with US dollars bull break negating this daily bear divergence, there is no significant red flag. Now we are seeing a significant break on this trend line where there has been 1, 2, 3, 4 supports and an immediate back test, and then another double rejection over here. So with this bull break now, what we could be looking at is a back test before an actual going into that key zone again. So US dollars, if you're sitting in cash, you are coming out ahead. This is one bad sign for the market, as people are going a little bit more conservative, which also makes sense that Dow is getting a little bit stronger versus NASDAQ. Second one, US 10-year. Now this is very similar to QQ over IWM or QQQ over DIA, Dow Jones. Double top, huge drop. Now we have to be taking a look at this. I wouldn't say on the short term, but I am keeping my eyes on this for when it does go sub 1. This is the US 10-year over 2-year. Even if we do go sub 1, that does not mean the market is going to be immediately crashing. Generally is 6 months to 18 months. So with that, we are seeing very nice drop on this. I don't know if it's nice, depending on if you're in bonds, I guess. There is a very clear daily 8 guide down, okay? Daily 8, reject, daily 8, break it a little bit, and then reject coming back down again. So breakout, fake out. And then daily 8, reject again, and then almost touch, come back down. It's just non-stop daily bear flags, okay? Daily bear flag, confirm. Daily bear flag, confirm. Daily bear flag, confirm. And now we're confirming again. So this is another breakout, fake out. We are sitting at the 1.14 now. It's only 0.142% away from going sub 1. Very key to note. So there is cause for concerns for the market in the near future. The cycle before has always been about 8 to 10 years for that correction, for that recession, whatever you want to call it. But with this, I do believe this cycle is a little bit different now, especially with what's going on, what went on with pandemic before all the stimulus that was issued. You know, it makes sense that the market could be looking at another pullback before even that 5-year mark. Okay, VIX staying up. VIX is not seeing any signs of slowing down. The daily 8 just, you can probably use a daily 10 in this case. Looking, you know, when I look at this, the daily 8, it breaks down, fake out, break down, fake out. Same with back here, break down, fake out. Yeah, I'll probably change it to like a daily 10 on this VIX, something along that line. But it is just grinding up, and we are seeing the highest close since January 2021. This is the highest 52-week highest close. Okay, more I guess more than 52-week, but this is the significant 52-week highest close. Huge lower wick. VIX, there is a lot of concerns out there with what's going on. Now let's take a look at gold continuing to rise. There has been some red flags, but it's all being negated. This gold was a long-term sideways action. Since we talked about the break on the day that it broke or the day after, I can't remember which day that we talked about it. This was a long-term sideways action since August of 2020. So a year and a half of sideways action. This bull break should see very nice follow through. We're already breaking straight past that GP. Breaking over the 0.786 as well. So if we were to do a extension target, I would draw it from the low over here to the high, the most recent high, to the most recent higher low. 1-to-1 extension target has already been blown out of the water. 1 to 1.618 extension target is at 2075, which lines up with this previous rejection. 2075 would be ultimately the target, the next target. We should see a little bit of a cool down based on this chart, but I do like the grinding along. There is no sign of climax yet. Ooh, look at those volume. Holy. Hold on one sec. Computer is lagging here. Wow. Look at those gold volume. Highest volume day ever today. Yep. Highest volume day ever today. It could be volume climax, especially since we're at the 0.786, but I don't see any red flags on gold. Man, this is turning out to be a much nicer play than I anticipated. Look at this. Holy. Anyways, extension target 2075 lines up with a resistance. Let's mark that previous all-time high as a resistance over here. And the highest close over here. Look at that. So that would be the target if you're in the bull position. Next one is, so this is another red flag. So US dollar, 10-year over 2-year, VIX, gold, all lining up, and Bitcoin. I think this is a weekly bear flag or is a monthly bear flag. So Bitcoin weekly bear flag so far. Lots of upper. Oh, there we go. There we go. That's what we're looking at. Monthly bear flag. Oh. Yeah, monthly bear flag. Big drop. A pull. Monthly 8 is holding. You could even call it a weekly bear flag because we're not making it over the weekly 8. And there's huge upper wicks forming here. So based on the weekly bear divergence that we have drawn from here, this weekly bear divergence, this is playing out. And with the weekly bear divergence and the monthly bear divergence, I do anticipate that there's going to be lower prices to come on Bitcoin. And especially if this 28,805 is lost, which lines up with the GP, the top of the GP. Once that's lost, we will be looking, my anticipation would be at the very minimal back down somewhere around here. Yeah. I would anticipate somewhere around here where we're seeing some supports from back here, some resistance from here, and then multiple rejections again, and then another rejection over here. So that 11,825 area, once that 28,805 is lost, that's another more than 50% down. So if you're looking to play Bitcoin, that would be your stop. 58% further down. Meaning, if you were to put just like a limit entry buy around this 11.6 and it bounces back up, hey, that's over 100% already, right? So when we look at, let's take a look at the extension target. Let's see if it lines up with that 11.825. So draw it from the high to the low. There is no lower high yet. It's just been grinding along. Anyway, so let's draw it to there. And we gotta change it to, oh no, I lost it. All right, let's draw it again. So we'll draw it from, actually maybe the weekly chart will work better. So we'll draw it from 69,000 to the low, to the lower high. And then we'll change it to 1-to-1 extension target just below that 11,825. What is GP lining up with? Nothing. Okay, GP doesn't line up with anything. This probably let's zoom in a little bit more. Actually, there's probably a better way to draw this fib extension. Low, bounce. So you could, the alternative is you could do it from here and then just draw two instead, see where they line up. So first one would be the high to the low to the higher low. Second one would be from that high, lower high, sorry, from that lower high to the low to the lower high, which is 45,821. So if that's the case, where are our extension targets? Hey, they line up with GP. They both, would you look at that? Hey, how come this is not at the top? Okay, let's do it from the top. Low, lower, high. Yeah, that makes sense. Okay, they're both around that GP area. So that GP must hold. If it's lost, 8K. Yeah, doesn't really line up with anything otherwise. Okay, and what about this one? This one were 1.618. I mean, there is a little bit of support resistance here. But yeah, if that 28,805 is lost on Bitcoin, huge red flag. The thing I don't like about Bitcoin right now, and we're spending quite a bit of time on Bitcoin this time because there's been a lot of questions that's been asked on Bitcoin recently. So when we look at this, I know you could say that this is a buying opportunity because it's dropped so much, but because of that weekly bear divergence and because we lost this money line, we're seeing, let's zoom in here because of the crazy price action, multiple supports, lost it, multiple rejections, and then broke over it, multiple supports again. You can probably draw a little bit better, but I'm using this point as a second point, I believe. And another support over here. And then now look at this break. This break was on volume. Okay, this bear break was on volume with follow through on volume the next day. It bounced and then rejected again. So now it's chopping around it. A bull break with volume and unable to. Wow, now it's forming a channel right around that money line. So it's I don't like the chart. Bitcoin, I would say another red flag. So that's basically 5 out of 5. Now let's take a look at crude oil. The hot topic that everyone's talking about. So with the oil price, we broke through key zone. As long as this guideline, why is there so many trend lines? Let me clean this up. So we don't need this one. Whoa, there's a lot of supports. So that one still makes sense. This one still makes sense. Broke over support. I feel like there's a better way to draw this. You can probably draw it bigger actually. So in this case, where is that dot? It's all the way back there. I would delete that. And instead just draw it to over there. You know what? Let's just delete everything. We'll redraw the zones. Redraw the supports. That's new okay, that's new highs. This zone makes sense. I'll delete this one. I'll see if I'm on monthly. There's so much chop around this area. This might actually be a huge zone. Yeah, this actually makes sense. That is huge. Doesn't look too big on the monthly, but on the daily is gonna be a huge zone. Yeah, I don't like it on the daily. You know what? We are going to split this into two zones. So first one is gonna be right around here. Multiple rejections. And then became support. A little bit of a chop around it. Rejection on top of a zone. Another rejection. Another couple rejections here. So that makes sense. And then I think there's something here. No, a little bit lower. Right here. Somewhere about there. Yeah, okay. So we broke through key zone. Monthly is getting pretty darn extended. Monthly is getting overbought, is reaching overbought fairly soon. Weekly is already overbought RSI at 83.12. And the daily, of course, overbought 82.28. I keep preaching that there's gonna be bearish play in oil, but there's no volume climax, so there's no huge red flag for oil bulls yet. So when we look at this, bounce, 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 and this bounce, boom, it just went. With that, there is no sign of volume climax. There's no reason for, there's no bear divergence. There's no reason for selling if you're in the bull position. I can see this continuing to run and then double top at 148, 145. Sorry, 148, 150 area, and before coming back down. That actually would make sense. On the weekly, there's a... This is Monday, right? On the weekly, there's a potential for climax. So, increasing volume. Big increasing volume. And today is only Monday. We're already way over last week's volume. There's potential for climax on the weekly. So we'll be watching for that. But aside from that, there's no major red flags on oil. Alright, so that's it for the leading indicators. Whoa, that took quite a while. So let's get into the hottest tickers. We discussed gold already. We discussed VIX. There are two other ones, the hottest tickers that are looking kind of interesting to me. First one's going to be DWAC. I don't think we talked about this too much. It did touch that money line today. So there's ever since IPO, it's just been bullish. IPO the day after, boom. That was Holy! I did not realize it was 1,286% move on DWAC on the day after IPO. So looking at this, it went sideways action for some time because of a huge pop. So it makes sense. Consolidate for quite a while. And during consolidation, we started seeing this money line forming. Is support. And then another 2 supports. And now today we are seeing a touch on that money line again. So maybe we can actually draw this a little bit better. I would rather use this one just because it doesn't, this candle doesn't lose as much. So with that, we could be seeing a low risk entry on this money line. What you would do is then just put a stop below. It's not lining up. Okay, so I don't like this because the fib does not line up with. This is support resistance. It's around there, but I would just put a stop below the support resistance, 77.50. So kind of like DWAC, it's been overall, it's been relative strength when you look at the chart versus market. Remember, market's three months of consolidation. When we look at the 3 months for DWAC, it's been green, red. Okay. So overall, it's still relative strength. Next one, the hottest ticker. I'm starting to see some strength on this, and it's very interesting where we're bouncing from. On the monthly, of course, we are seeing a bounce from that money line. We hold that money line on the monthly. Okay, bounce. The third touch on the money line. Now on the weekly, we did lose it slightly, and then spinning bottom candle. And we saw nothing but bull from there. It got immediate back test of that money line as well. And on the daily, look at that. Gap down, immediate back test. Whew. This is looking like a very decent chart now, actually. Low bear volume, very nice bull volume coming in. Earnings is coming up, so that could be a catalyst for either bullish or bearish. If this goes bearish, it could get a little bit scary because we did bounce from that key zone. If we're to lose that top of key zone, we'll be looking down at the bottom of key zone, of course, around $2. That's another 50% drop. So I wouldn't be too comfortable swinging this into earnings, especially given what the current market situation is. And we're gonna need to see what the volume coming into earnings is. So far, I like it. Low bear volume, high bull volume. So that's the hottest tickers. I have 4 picked out for you today. And let's get into the requested tickers. First one we're going to be looking at is going to be coins. Oh, been a long time since we looked at this. I like how there's a support area. Yeah. Coins starting to form a support area. So it did make a new low. IPO, you see how this IPO is completely opposite of DWAC, just straight sell before another pop. I remember this because Kathy from ARK bought on that first few days, and then she sold over here, somewhere around here, just to break even. And since then, it has been nothing but selling. New lows. Now, when we look at this, it's somewhat of a new low, no follow through. I like this. It made new low. Next day, it got follow through, but it bounced. Now we're seeing a potential for a reversal, a bottoming process being formed here. So the low of 155.92, of course, is the ideal hold. I'm just checking to make sure that the zones still work. This one can probably be a little bit higher. There's a wick here, but it still works. You can see a rejection over here, bounce. Yeah, so it's definitely a low risk entry area, bottom fish play. The bulls need to break this upper trend line. This is no longer valid. We had a sideways break. Okay, remember what we talked about on Tesla. Remember what I talked about on sideways break. So this was the upper trend line that we're looking at on the daily before. And on this sideways break, There's no volume coming in on the break. Sideways, and then boom, coming back down again. And now we form a new daily upper trend line. This one needs to go for full bull confidence. However, right now, this is a very ideal first low risk entry area. You know, half sizing, a third sizing kind of a thing. Maybe, you know, depending on how you want to play it, if you're like thinking like half scope, you could even go like double sizing, and then just on the bounce, you know, it's going to be scary because you're going counter trend. On the bounce, then you would just take half off, opposite of what I usually do. But low risk entry, I like it. There's 155, as long as the 155 hold, you can put a stop below 155. The only problem I have with it is trading in new all-time low area. You're gonna need to see that reversal coming in very soon on coin. Next one is Mara. Is this a clean chart? We actually don't have any drawings. Oh, okay, never mind. Internet's extra slow today. Hey, we're right at that key zone again. It's very similar to a coin. This zone can be drawn a little bit lower. Where is it? Oh, it's drawn all the way from back there. See how previous supports are coming in again? Boom, boom, boom. Four bounces from this zone. And now we're still trying to bounce from that zone. So I can probably draw it, you know. For me, I think we can draw this a little bit lower now. Okay, so it did close under support. Yeah, I like that. 1832. Yeah, that makes sense. Might draw it. I like it over here more. Body bounce. Wick bounce. Wick bounce. Body bounce. Yeah, like that. So, and then if we look back at this area, support with wick under, rejection, and then broke over. Yeah, this is much better as a key zone. So with this, the 1943 is the must hold on the short term. Is there any patterns on this? So this is a head and shoulders follow through. Sorry, head and right shoulder, and the neckline. Oh, this is a close call. This is a close call. Because this did make a new low, but so the neckline would have been somewhere around here. Somewhere right there. And you see how there's like multiple supports right around that neckline. And then boom, bear break on increasing bear volume. Almost did a back test. And then since then is the daily 8 guy down. Daily 8 rejection again over here. Breakout, fake out. So there is a upper trend line as well for the bulls to be watching. And that would be right there. So you see why we use upper trend lines? So I use this one. So let's discuss, you know, look at this trend line. We use this one as the first point. We use this one as the second point. And look at that rejection. I can probably move it a little bit closer now because of how big that upper wick is. Look at that. That is so close. So close. Until this upper trend line breaks. So essentially we are in a descending wedge right now, where this zone down here is that lower trend line. 1, 2, 3 bounces already, and 1, 2, 3 rejections. This could go either way. On Mara, it could go either way. Assuming it's big, knowing how it's Bitcoin based or crypto based, I would assume it's gonna have a bear break because I'm looking bearish on crypto. Bitcoin specifically, but when we look at this, you know, huge pop. What is it? $2 all the way to 57, and then all the way to 83. I would anticipate a dragged out consolidation for a longer period of time. Was there a bearish divergence? Does it look the same as crypto? Oh, strong bearish divergence as well. So when we look at this, there is the high to the higher prices on price action, and then the RSI. I guess depending on how you draw it, this one would not be a bearish divergence. So we got a bearish divergence negated, cool it off. I don't know. You could call it a bearish divergence. You could say there isn't. Monthly, oh, Monthly, there is definitely a bear divergence. So we'll draw a monthly instead. Monthly bear divergence. This is gonna go for a long period of consolidation. So this is the high. Probably draw over here because the RSI is based on the closing price versus the wicks. So that is a strong monthly bear divergence. That is currently just seeing, not even seeing follow through yet, in my opinion. This one is just starting. We don't need this trend line anymore. This one is just starting to play out. So I can see this having a monthly bear flag before coming back down again. Mara, I mean, it's good. Don't get me wrong. This is a good area for bottom fish play. Just have you stop in if you're looking to play this. Most recent supports, 1943, 1951. Next one, SU, Suncor. Right at key zone now. Right at key zone. Monthly chart, amazing chart. 32. Oh, it's 3 times already, all the way from pandemic low. Finally running. Of course, it's oil. Weekly, yeah, we're right around that key zone now. Why is there so... Whoa, it's one of the older charts. There's so many support resistances drawn. So let me clean up the charts here. Bear with me. So we gap filled already. We don't need that one. Key support that needs to hold. This doesn't matter. This don't need. Feel like there might be a zone in between, but I feel like we have enough zones already. We will delete this one too. And actually, let's draw a different one. Let's go on the weekly. Okay, so somewhere around there. Rejection, multiple rejections, multiple supports. Breakout, fake out. Wick right on the top of the zone. Almost reject again. Yeah, I like this area a lot more. I like this area a lot more. This one you can probably draw a little bit higher. Actually, that makes sense. So right there. Higher or lower? Anyways, I don't think we'll worry about it when we come back down. If it comes back down. So money line, we're getting extended away from the money line. It's all the way down here. And all the way down here. There is a new lower trend line. Increased momentum to the upward, to the upside. So lost it, reject, makes sense. And there's probably another one. Yeah, most recent trend line. I feel like, yeah, that looks very similar to this trend line. I imagine is going to be very similar to oil. So money line, increased momentum again. When this comes, if and when, actually, let's say when, because I know it's going to come back down. I know what goes up must come back down, right? When this starts pulling back again, think of there's just so many charts out there. It goes for long-term consolidation. Look at marijuana. Look at skills. Look at any of the growth names. PLTR, Piton. I know you can say Piton is news-based because news-driven. That's why there's bearish action. No, doesn't matter. The chart, once it goes up for so long, it's not a blue chip. It's not Apple. It's not Microsoft. They have sustained, continued upside versus a lot of these, once it pops. And actually, the thing that's very interesting is there might be an upper trend line on the monthly too. And that would show us where that top would be. Hey, look at that. Okay. There's still some room to run. based on this upper trend line, there's still some room to run. Monthly upper trend line. So ultimately, this Suncor is in the monthly downtrend. I feel like there's a better way to draw this somewhere. Rejection, support. So this is support. Lost it, back test. Rejection over here. Did it touch? Yeah, it touched. And we use this as second point, I believe. Yeah. So there's another rejection. And make sure that it's still touching back here. Yeah. So if we were to draw it to the wick like we usually do, still touching. Still touching. All right. So that is the sell line. We'll call it the sell line. This when we get here, no support. I don't know if I call that support, but short-term support, clear rejections. So if there is a chance that this could, based on what's causing this to move, there is a chance that we could go straight into this upper trend line before a huge rejection. Okay, so on oil, on Suncor, it's gonna be a very similar idea. Actually, let's take a look at oil. Is the monthly chart look the same? No, oil is actually broken bull on the monthly already. So the monthly trend line, the monthly upper trend line on oil is right around there. It's already broken bull. So in comparison, oil is actually stronger than Suncor. Right. So next is gonna be Disney. Philip, our Disney guru. Why do you ask me to talk about Disney when you're the one who's the Disney guru, man? All right, so when we look at this on Disney upper trend line, another rejection. So there's 1, 2, 3 rejections, a third touch on the upper trend line already. What is that earnings? Earnings was a pop, wasn't it? Oh, wow. Okay, so the last time I checked this chart was earnings. The last time we talked about it was earnings. It did pop the next day. No, that is earnings date. Hey, look, it was rejected from on earnings day. So it ran into earnings, gapped up and run the day before earnings, and then huge pop the next day on earnings after earnings. And then since then, it's just been a straight sell-off. So we're back in the key zone again. GP still hasn't been touched. On this weakness, I'm thinking there could be lower prices to come on Disney. This is kind of interesting because we're not making daily higher highs. This is a gap down sell off, and then upper trend line reject, and straight back down. Look at this selling action. We are a little bit extended on that daily. There's a strong daily bull divergence here that saw a little bit of follow through, but unable to make daily higher highs. So the chart is a little bit red flaggy to me. Let's see if that is lost. Is there going to be a key zone that lines up with that? Yeah, I like this area. Multiple rejections. Is there going to be a key zone that lines up with the GP? Okay, so right around here. Let's draw it to the top, see how that works. Reject. Yep. Support. I like it. So that zone might make sense. Multiple rejections, yeah. You could probably draw the high of the zone a little bit bigger. So for a blue chip like Disney's, this kind of zone makes sense. As you get lower, the stronger the support is, the bigger the zone is. So with that, it is below GP. Anyway, so the red flag on Disney that I see right now is not making daily higher highs, and the selling. Look at the volume. It is still there. Now you can look at the volume. The volume is still increasing bear volume. There's minimal buyers. The gap down day, it popped, and then made new lows before the market did. There could be another bull divergence coming in. If we were to get into that GP, could be a decent bottom fish area. So RSI, some people use RSI support or RSI trend line support areas. So that could be an area to look for if, it does line up. So if we were to get to GP, RSI would get to that trend line kind of a thing. That would be another daily bull divergence, and we can see another bounce to somewhere over there. So that's Disney. Next one is Ford. Oh, sorry for the long video. Holy, covering them in details. Hey, it's been too long since I made a video, and it's really covering each ticker in details. So Ford still guided down, very similar to Disney. Rejection, rejection, rejection. So this upper trend line must go, and I don't know why we have this trend line is chop. Lots of chop. So this is no longer valid. Don't need that anymore. This, we played the bear already. So the 1, 2, 3, 4, 5, and now we're looking at ABC correction. So this is a long 1, 2, 3, 4. Is it weekly? Weekly 1, 2, 3, 4, 5 run. So we'll be looking at ABC correction over here. Now it's a matter of where that A is gonna end. This is still one leg down. There's gonna be a potentially a good short opportunity on a bounce because of ABC correction, and you can still see weakness in the chart too. You can see weakness because the bounce is weak, same as Disney. We can't really. This is going to be hard to anticipate where the B is going to be bounced from because we haven't found the bottom on the chart yet. But based on the chart of this high to the low to the lower high, that extension target is at $13.98, just about $14. Not seeing much support there. There's some resistance over here, one single support over here, but there is money line over there. That could be money line. I can't see this chart going over here before a B bounce, so B to the 0.382, roughly around over here. That would make sense to me. The chart is still weak. Yeah, that's what I would anticipate on Ford. No red flags if you're in bear play. Next one is LMT. Lockheed. Did someone not mention this one? I think someone brought this up in our chat group, and it's really running since, hey? Dividend play. I can't remember the day that was brought up. It was somewhere over here that was brought up, and it's like a 20% run already. Nice. $52-week new high. Is it all-time high? New all-time high. No resistance area. Blue skies. LMT. On the monthly, there's no red flags. On the daily, there's a shooting star reversal right now. Decreasing bulls with a bull pop. Slightly extended on the daily. Short-term wise, they're kind of okay. Weekly, there's a potential shooting star as well. Of course, there's another 4 days to go. We're getting overbought on the weekly as well. Short-term, there could be a consolidation coming in, but on this chart, there's no red flags. You're in blue skies. There's no resistance. This could continue to run, no problem. Just like very similar to oil kind of thing. As long as these same causes are still going on, I don't see any reason why you would exit these plays. Gold, oil, LMT. Short term, I can see a consolidation back test this previous all-time high. We already got that immediate back test. So the more ideal is something a little bit more clear, an actual back test. Oh. Okay, there we go. So bull break, immediate back test, and continuation. Now we're going to want to see it maybe 1 or 2 more days before actually coming back to see that actual back test of the previous all-time high. But Lockheed is looking good for the bulls. Next one is LNG. I don't think we looked at this one before. Chenier Energy. All right, so energy is all going to be the same. Very similar at least. This one, there is bear volume, so it's a little bit different than the other ones. Earnings is red. Whoa, 381% surprise on their earnings. Estimate was a positive earnings and became a negative. Revenue was decent. So I would imagine this one to be actually a little bit more bearish in comparison to oil directly. But it actually looks stronger versus Suncor for sure. New all-time high. No reversal candles. Nice bull volume on the weekly. I think this is a monthly 8 guide. Yeah, monthly 8 guide. So monthly 8 right now is 112.86. I mean, it is quite far away from the current trading price. That's 20% wiggle room. So with that, you know, you could be looking at daily 8 as the guide. On the short term wise, is there a 4 hour? Short term, there's a 4 hour. Let's see, bounce over here. Just depending how tight you want your stop to be. Blue sky, no resistance. 4 hour 8 is the immediate guide, and on the actual guide wise, watch if you're not in. Wait for that monthly 8 touch. Monthly bull flag confirm. Monthly bull flag confirm. Getting pretty extended. Monthly is already overbought on the RSI is 84.42. Weekly there is a bear divergence forming as well. Daily bear volume coming in. So a little bit red flaggy, but 4 out 8 is your guide. Next one is XOM. Man, there's so many oil here. Same idea. This actually, I think XOM is one of the ones that's closest to oil chart, zone wise, trend line wise, move percentage wise. So this one, if you're looking at this, you know, just look at oil. As long as oil is going up, this one's gonna go up. It's actually one of my top pick for if I were to play oil. XOM. CEI is next. Yeah, there's a pop today. CEI had a pop today. We broke over on volume, continuation as well. So gap and run. Very clear trend change. See, I like. Oh, this is actually. This could be a. So this is a small cap, of course. What is it? 320 million. But this is a very key break on CEI. Very key break. So rejection, 3 rejections, and 4 rejections, and then we saw bull volume. So low bear volume. Bull volume started coming in on Friday, and today, boom, gap up and run. Is this news? No immediate back test, so there is a gap left behind. But based on this bull break, if you're not in, I would probably do a reduced sizing kind of a thing. But the most ideal would be a back test of this trend line, because this has been multiple rejections, and especially if this is news, watch where we're rejecting from. So there is a where's my cursor? Right around here. Support, rejection, chop around, another 2 rejections. So there is a little bit of a key zone over here, and we are rejecting from that key zone today. Tomorrow is going to be pretty key. Tomorrow, you either want to see that immediate sell-off or back test. I don't know if you want to see that. This is gonna be a huge red flag if you see that immediate back test. With the way that it's running now, tomorrow, if you're in bull positions, you need to see that continuation. The 153 is the key to break on CEI, and last but not least is PBR. Huge bearish action, huge bearish volume coming in. Support resistance area. So there is a support resistance right around here. Rejection. Gap up, support, support, support. That $14.93, $15 is very key. And we're rejecting from it again. So if this short-term daily trend line, this upper trend, lower trend line, sorry, is lost, we'll be looking at money line. And money line should be somewhere around here. Let me just draw it to this one. Doesn't work that well, eh? Let's use the daily. This is the money line. I don't like how it didn't touch there. I mean, ultimately you could argue to draw to the real body so that it does touch, but then you will have a breakdown fake out over here. So we'll stay to our normal habits of wick to wick. So wick to wick, once this increased momentum trend line, lower trend line is lost, we'll be looking down at money line. With this kind of action, price action and volume today, I would anticipate lower prices to come, at the very least a back test of this increased momentum trend line, lower trend line. So with this, you know, if we're to, there is a support resistance right around here at about 13.16. Something. We could get straight there tomorrow. Straight to the trend line tomorrow. Anyways, so that's it for today's video. Hope you guys enjoy the content, and I do thank you for your patience for no video for the last couple weeks, and hope you guys enjoy the content. If you know anyone that may benefit from the content that we share, please consider sharing our channel with them. I really appreciate you guys. And a quick reminder, there is still some slots available for our free membership to the chat room. More than welcome to join. The link is going to be in the video description down below. And I will see you guys in the next video.